Frankly speaking, IFRS 16 is not tested very often. And it is daunting because you spend so much time reading about lessee's point of view, lessor's point of view, sale and lease back. But when it is tested, it is important to understand whose side of the story you are vouching for. If it is the lessee, so the one who takes the asset, then the question is going to be based around, let's say, whether it's lease or whether it's just a service, or what to do if there are changes in the lease agreement and as such lease liability needs to be revalued. If it is the lessor story, then we would talk about finance lease or versus operating lease. And if that's sale and lease back, well, that doesn't happen very often, then we're going to see if the sale has happened or not. If it is the lessee, so the company that takes the asset. So first of all, we are going to try to understand whether there is going to be a right of use asset. So whether a contract creates an identified asset. And for example, if the lessor can substitute the asset without having to bear significant costs, and they can benefit from that, we would need to say that there is no identifiable net assets. And if there is no identified asset, I said identifiable net assets, if there is no identified asset, then this means that this is going to be just a service agreement. So we are going to recognize rent expense on straight line basis. Another question is what to do with the lease liability reassessment. Lease liability, when reassessed, is going to be adjusted as one side of the story relates to lease liability, most likely increasing it, and the other side of the story relates to right of use asset, most likely increasing it. And then the right of use asset is going to be depreciated based on the remaining useful life and based on the revised carrying amount. So the depreciation is going to change, as well as the finance cost that is charged. When we're talking about lease accounting, quite often this very standard is tested as part of question 2, so that they would test ethics as well. And if a company failed to recognize the lease accounting, failed to recognize right of use asset and lease liability, then this means that gearing looks better than it actually is. And that could raise questions as to the integrity, as to the objectivity, as to professional competence and due care of the person who is preparing the accounts. And one last thing that I would like to remind you, right of use asset is just a normal asset like property, plant, equipment. So all of the costs that would be capitalized for property, plant, equipment would be capitalized for right of use asset. So for example, installation works are needed to bring the asset to the condition and location, they will be capitalized. Or, for example, if there is a provision for dismantling, it's going to be capitalized. So it's going to be credit provision liability, debit, right of use asset. And yes, your right of use asset will be recorded in a different amount compared to the lease liability. And that is how IFRS 16 leases can be tested from the lessee's point of view. And of course, it's not the exhaustive list of all IFRS 16 requirements, it's just for you to understand what to expect.